Okay, looks like we're live. Om lokaha samastaha suki no bhavantu. May all beings be happy and peaceful. Hey, what's up, everyone? How's it going? Happy New Year. Off to a good start so far. I am very optimistic about 2023. I have went through a lot in 2022. I think for a lot of us, a lot of people are asking me, has this been the worst bear market? For me personally, it definitely has been. I've taken some really big hits this bear market, which usually you'd think that it gets easier as you go on, but sometimes it's not the case. So, but 2023 is actually looking, I think the technicals look really good. It's really good setup for some, at the very minimum, some pretty vicious rallies. And I think we're actually on the brink of one here, headed into this week, but we don't have any confirmation of that just yet. There are some early signs, and I'm going to go into that in a minute here. Welcome, everyone. Hi, Manu. Good to see you. Hi, Adam. Hi, Miki. Yeah, just feels really good. I don't know, for me, just I feel really good stepping into 2023, and fresh slate. Made some good money in the tail end of 2022 off the whole FTX collapse, and had some really good shorts there. But yeah, overall was a rough year. So bouncing back this year, and it's my aim, of course, to help as many as possible and to share my insights and share my knowledge as much as I possibly can. And I've actually been working hard over the break. While I wasn't putting out videos, I was actually working on the Small Cap Superstars report, which is now released, and I'm proud of it. I feel really good about it. I actually did not do this in the last bear market because I was lazy, and you get kind of discouraged when things are like this. And so, but this time I sort of forced myself to do it. I heard about a lot of projects. I researched a lot more, and I narrowed it down to my top 10. I think that there's definitely at least a handful in there that are going to do incredibly well in the next bull run, with or without regulations. I think that, yeah, so I'm not gonna, so it's definitely, it's a paid thing. It's pretty affordable considering what it is. It's 42 pages. But if you're a serious investor, for me, I wish that someone had done this for me in the last bear market. It's just, I think it's invaluable. And of course, time will tell. But when it comes back around again and we're in the full swing, and some of these small caps are in the top 20 or 10 even, people are going to be, they're going to be like, where was I when all of it was going down? Well, you weren't paying attention. So it is what it is. The early bird gets the worm. So if you want to get more insights and more discounts and all of that, then I definitely encourage you to join the C3. It will not always be open to the public. I may actually privatize my trading channel soon, but it's all there right now. I share a lot on the C3. I'm not sharing the superstars in there directly, but I will have a channel where I'm sharing exactly how much I'm investing from a percentage standpoint. And I break it down in the introduction to the small cap superstars. If you go in, just click the link, and it'll give you the first few pages where I break down my methodology. And I'm literally sharing with you my relative percentage investments for all of these. And these are the only small caps that I will be investing in. Of course, there may be some late additions, but I feel really good about this list. And some of them I feel better about than others. So I have a weighted system. And actually, one in particular doesn't even have a token yet. Hardly anybody really knows about it, but I'm actually most excited about that one, and you'll know it when you see it. It's the wild card in the mix there. So yes, good morning, good evening, good afternoon, whatever it is for you. Let's take a look at the charts now. Feels good to be back. I deliberately took a break. It was needed, and I feel like we didn't miss much, right? There wasn't a whole lot. I've actually been in a long for, I got in a little bit earlier than I probably should have. I think it was somewhere over here, or maybe it was, I don't remember where it was at this point, but the technicals haven't changed since then for me personally. So I cleared the charts. I cleared all the levels on my charts. We're going to start fresh here. It's new year. And usually it's a good idea to do this every so often. Some people do it every week. Some people do it every month. Usually for me, it's more when there's big price moves. It doesn't necessarily happen at a specific time, but a new year is obviously a good time to start fresh. So we're going to do that. And so bear with me because this takes a little bit of time. We're looking at the yearly open. And actually, excuse me, first of all, I have a little bit of a dry cough today. I'm still recovering from whatever I had a couple weeks ago. And it's just sort of they call it the post-nasal drip sort of thing. I just have a dry cough. It's really annoying. So I might cough a little bit here today. So the yearly open is what we want to look at first here. It's always good to mark this, and I'm using the magnet tool to just bring me to the level so that I don't have to figure out what it is. And then I color code everything so that I can see. And this one I do a little bit darker, and I will also add some text here. And we have 2023 open. Okay. So you're welcome to do this with me if you'd like. And then I drop down to the quarterly, and you can see very clearly that we are in between. We're in the middle of this here. Okay. So this was the previous quarter, and this is the most obvious range based off of this chart here. Okay. Nothing, and you could see, yeah, nothing else is really standing out to me. So I'm going to label these as quarterly levels. And what I do when I'm color coding is I usually start darker. Like I have a darker blue. That's more of a annual level. So this would be a quarterly level here. And then I'm just going to put Q for quarterly. So if you're seeing these charts in the future, you'll know what they mean, right? Some people have asked me if there's special indicators, and no, I'm doing this all manually. Maybe one day we'll have that. I guess the color didn't change on this one for some reason. Oh, the text color changed. Okay. Let's do it that way. And we'll change this back to white. Okay. I'm very specific about these things. I think that the more clean and organized your charts are, the better trader you will be in the long run, because having a system and following that system is one of the keys to being successful as a trader. So now I'm dropping down to the monthly, and we have a monthly level up here that actually is significant. And I would actually take it back. Yeah, I would take it back a little bit here. So I'm going to take it to this level here, to this month. This was in June, because this was a previous range. This was sort of the very bottom of that range. We did wick back up into the range, but then was rejected down from there. So now that we're on the monthly, I'm going to make it a little bit lighter. And again, this is just my own style. I'm sure you've seen others, but when it comes to price action, knowing the longer term the level, obviously, like a quarterly versus a monthly versus a weekly, the more significant. So a monthly level is going to be more significant than a weekly level. A weekly level is going to be more significant than a daily level, and especially if it hasn't been tapped yet, which this one has been here. But if it hasn't been tapped yet, and maybe we see multiple wicks down at that level, but we have to see what really stands out and where the obvious ranges are. And it's not an exact science. It's a little bit of an art as well. And it's always subject to interpretation. So I just want to change. Let's make this a little bit lighter here. Okay. So now that's our monthly level. And then we're going to look for weekly. What's going on in the weekly right now? We're kind of you could actually say that I would actually consider this was back in November. This was our weekly range here that we're still very much sitting inside of this range. And you'll notice what happens, how we get confirmation on this is when I drop down to the lower time frames, you'll start to see more confluence. In other words, you'll see like SR levels, you'll see supply and demand, you'll see things like that. Sometimes you go back and you revisit these charts and you think, that really doesn't apply anymore. It's not that important, or we've already moved way beyond that level. And so that's why it is a good idea to go back and start out on the monthly and then just drop down, get the macro view, drop down, get the overall context, and go from there. So, hey Yako, how's it going? So what was that? That was a monthly level, weekly level. This is a weekly level. So I've used kind of a pink color for this. This will come together in a minute here. It does take some time, and this is why a lot of the times I just do this beforehand. I have my levels already set, but I think for some of you this might be helpful if you're interested in learning this. And I think I have a dedicated video of this in my course, or courses. One of the courses in particular has it. So that's our weekly. This is a weekly level of significance here. Because it encompasses pretty much all of this with these two deviations. So that's why I am considering this weekly level. And some people would go back to the previous week and take the range in here, and that's perfectly valid. And we are in the mid here between this high and this low here. So, I mean, there's a lot of different ways to interpret this, but that's what is standing out to me right now. So on the daily level, on the daily chart, you can see actually, notice this weekly level that we drew here, and notice how the price obeyed this as resistance for a very long time before breaking above, and it was only above temporarily, so we can classify this as a deviation. And we see that this is an evening star pattern here on the daily. We see the big strong green candle, morning star or doji, and then the red candle that followed it, and then back inside the range, came all the way back down again. Okay. So this is a valid range that was established here, okay? And actually a single candle, we could say. So now we're going to drop down to the 4H and see what we can see. We start adding details. We start refining our ranges here. And actually exactly close to where the price is right now, this is a key flip zone that we've been. And so this is where I start to turn off my magnet, because notice what happens when I try to, it's too messy. There's too many details now. It's not going to help me. So I pick a level that feels like it's containing. So this here was an obvious level of resistance that did flip. I'm looking not just here, but I'm also looking over here, and you can see that it did flip into support here. Of course, this was a sharp drawdown deviation, but then got back inside, held as support again. Then again, we could classify this as one big long deviation. And so this level is really significant, or was for me. And so this would be for aggressive longs. This would be a trigger, especially if you consider that if we zoom in again, let's look a little bit. Well, let's just see if we got all the levels on the 4H here. So there is another zone right here that I would, and I don't always go, you notice I'm not going to the top of this wick here because I'm looking for where the majority of the price action is contained within. And this is just my own personal strategy. So I'm going to change the color on these just so that to identify them as 4H levels. I usually don't label them once I go beneath the daily, if there's like a 4H or a 1H level. So if you're trading on the 4H or the 1H, then it makes sense to also have daily and weekly levels of significance, okay? And so on. So you want to have at least 2 time frames above, ideally looking beyond that even. So now we have our 4H. We have a pretty tight range here that we've been sort of kind of oscillating above and below here. and we don't have, and if we look at this larger range here, we see that, well, here's our quarterly range, and this is our monthly range, which isn't quite, it's not quite the midpoint, okay? But if we look at the bulk of this price action, this value area here, then we're just above the mid. We're just above the mid right now. And it's been sort of holding steady here. We saw this sharp move down, but it's been holding steady. I'm just looking at the pure price action of Bitcoin right now, not taking into account any of the other macro context, not looking at the stock market, not looking at the Dixie, none of that. It looks to be holding steady right now. And that's just, we're just looking at the big picture here. And this is how I make a lot of decisions. It's not all that I use in making decisions when it comes to taking a long or a short position, but I want to see the long-term view first, because then when I start to zoom in, then I have some context. But if I just zoom in here without knowing what happened previously, then I'm pretty much lost. And so a lot of traders, I think, get lost in the chop here. And that's understandable. And I know that when I started out, it was the same for me. It's very easy to be confused by this, to be bewildered by this. And for a lot of traders, this is a no trade zone, because it just, if you can't make sense of it, it doesn't make sense to trade it, right? But we can make sense of it because we have these levels now of significance. And that's where we have the context that gives us the clues that we need. And so we have this level here, and notice this. What does this look like? This is an inverse head and shoulders, okay? And not only that, but we have wicks. We have some wicks down here. This one here, I always look to the left to see what happened previously. Why did it have such a strong reaction here? So being inquisitive, asking the right questions. Why did it have a strong reaction here? Well, because this, for one, we had a sharp move down that was, and we could see the rejection wick. And this is a sign of what? This is a sign of strong demand stepping in, okay? And usually it's whale demand, okay? If they can, if there's enough liquidity in the markets. So in which I would say that there is still at this point. But so looking even further to the left here, you can see, and this is where I'll use the 4H or the 6H or maybe even the 12H, but you can see this here is what I would classify a demand zone. The price didn't stay here for very long. It was the origin of this strong move up, and you can see the wicks down here. So this was the beginning of this move. So now this first time it came down, wicked all the way down to the top of this range here, and then was instantly rejected. The second time it came down, but didn't come down quite as far. Okay, so, and then it showed it's bounced around, but we're seeing this pattern. Now, if there's ever a question here of what's going on, what I like to do is invert the chart. And you can see that, what does this look like? Again, it's a pretty obvious head and shoulders. It looks like a topping pattern. And if we take this overall context, well, here, this was a big strong move up here, okay? And then consolidation, another move up, but the move up wasn't as big as the previous move, okay? So it looks to be losing steam from an inverted perspective. And so that means that when we go back and we see this, and we could also classify this as a potential, triple tap. But again, it's a head and shoulders triple tap, however you want to look at it. We can see the momentum is slowing down, and it looks to be wanting to come down here, which means that it's probably going to come up at this point. So that's why I'm positioned long. And now, as far as entries, trigger points, all of that, I identified these in the C3 group today. There's aggressive and there's conservative. And so a conservative entry would be maybe waiting for it to clear. Maybe it comes, maybe we get a retest, which we kind of already did, but maybe we get another one. And then it comes back again. And then it comes all the way back up here. Okay, a conservative entry, maybe not a very conservative one, but a conservative entry would be once it clears this level here. And this is around 16,928, okay? And then from there comes up to this weekly level, maybe this might be a take profit level for some. Maybe others, it would be another entry. So at this point, after this point, I probably wouldn't be looking for entries because not sure on the upside on this, but here's a monthly level here. Maybe a take profit zone. But actually, I'd be targeting much higher. I'd be looking at minimum probably 18K for a take profit, okay, for me personally. And then from here, it could come, who knows, could come all the way back up to this level here. That would be an interesting rally to start the new year, to say the least. But I do think that at minimum, in my humble opinion, I think at minimum we're going to come back and revisit somewhere around 18K. That's my take on it based on what I'm seeing with the technicals, and also looking at the SPY. Right now, what we're seeing with this is it's in a sort of range bound environment. We have no activity on this because it is a bank holiday, so we don't. Crypto's moving without any sort of guidance from the stock market, which is nice for once. But I think that tomorrow, let's just say that we do start to see some more movement back up. You see there's a range here. It's tried to push down beneath this several times, and now it's coming back up. So I would think that the most likely move for the S&P would be to come back up again, and at very minimum retest this. Maybe it breaks down. In that case, I'd be looking to maybe scale out of my longs, but maybe it comes back up and it is able to break back above here and push higher, okay? Because usually we don't see this sort of price action. You never know, of course. It could just be a bearish rectangle on the lower time frames. But my hunch here is that it's going to push back up higher here. And in the meantime, that's going to give Bitcoin and Ethereum more room to run higher. So these are the levels for Bitcoin. I already took an entry down here, but conservative entry around 17K once it clears. Once it comes back up, retests, and then clears, clean break above here, this level, which as we've seen, it hasn't really been so clean. A lot of the bigger moves are just happening all at once, it seems. Those 5-minute candles can be very frustrating, but I think that starting tomorrow, hopefully there's no funny business between now and tomorrow, but starting tomorrow, we're going to see a little bit more stability, at least in crypto, and more sustained moves. So it would be very nice if we could see that. I guess maybe I'm just being optimistic. I don't know. What do you think about this? How are you positioned in the markets right now? We're going to take a look at Ethereum as well. And I'm going to clear this chart. Let's just get rid of it and start over. Okay, goodbye. Matej, you've got a long, yeah. So, I mean, there's a lot of potential upside. This is one of those, from what I've gathered, not just from myself, but from other traders as well, this is a positional opportunity. It's not just a scalp. And maybe that's wishful thinking, but I do feel like a shift in sentiment seems to be destined. And always remember that at the end of the year, there's a lot of tax loss harvesting. There's a lot of people selling off positions and to report on their taxes, and then maybe they'll buy back again shortly after that. So, and that's both for individuals and for institutions. So just keep that in mind. Now, Ethereum, this chart has not been as easy for me to read. It's not as clean as I am used to seeing with Ethereum. Why are there 2 lines there? I just wanted 1. Let me just delete this. Get out of there. Okay. So here's our yearly open. Oh, but it's got it at the wick. Is that the wick? God, this candle. I'm just trying to. It's such a small candle. Yeah, that's the yearly open. So we're gonna label this here, and I'm gonna have it in sort of a charcoal color. Always good to have important key annual levels. If we're above it, generally a good sign. If we're below it, you know, it gives you context. That's really all that this is about. I'm not using it as a level of significance, although sometimes it can play out that way, but it's just giving me context. So this will stay up for the foreseeable future. And then we're going to drop to the 3 month. And again, we have I'm going to use this again, the previous quarter, as our range from a quarterly perspective. And just, again, this is just sort of just in case the price really pushes up and we see, okay, this is potential resistance on the way up. It doesn't necessarily mean that it's going to play out that way, but it's good to know. It's good to plan, to anticipate. And that's what we're doing for 2023. And I mentioned in my other video, I do believe that the bear market will end in 2023. I do believe that it will happen sometime in the middle of 2023. Hopefully before the summer solstice or around that time, we'll break out of accumulation. But I do think that accumulation is around the corner. If it hasn't already started, there may be another surprise leg down. But at this point, at this stage in the game, you know, I was calling for 12K a long time ago. A lot of other traders were as well. But now everyone's sort of on that boat. And when everyone gets on the boat, then the boat has to shift and it needs to take a new direction, usually. So just be prepared for any possibilities. It could be that the bottom is already in. I don't personally think so yet, but I do feel a shift happening right now. So that's my take on it. Let's label these. I'm going to be quiet for a minute so I can focus. Okay, let's make that same color. This can be very tedious, but it's also just super helpful. And then here's, I'm just going to use these monthly levels here. It makes sense. Yep, that makes sense. There and there. Color coding really does make a difference. It makes a huge difference to be able to just to differentiate. And you have your set colors on TradingView that you use, your custom colors. Mine just flow with my existing color scheme. And then weekly levels of significance. And that was in November that we were looking at that weekly range for Bitcoin, but actually for Ethereum, this is standing out to me more than this right here is a level of significance for me. Yeah, and that would be a weekly level there. I don't always sometimes you'll drop down to lower time frames and the higher time frames has already been covered, right? So there's no need to have it twice. It's actually just that much more significant. So now we're going to drop to the daily and notice there is one area that was not captured on the higher time frames, and it's somewhere in the middle here. And this is a pretty key, yeah, this is a pretty key SR zone, and we're actually sitting right on it right now. We're sitting on it for Ethereum. Because if we drop down and we see this, let's just identify it that way. And I am going to label this one. It's my daily, okay? But if I drop down now to the 4H, you'll see the range. Here was a very clear range here with a deviation back inside, back below. Again, this could be considered deviation, or you could consider this another range. So we're not as clean as Bitcoin, but looking at potential long setups for Ethereum, and this looks very similar to Bitcoin in a lot of ways, but it's at a key level right now, and I would be waiting for it to clear. And you can see this gray area here, it clears 1225 with some strength. This could be a long setup heading back up, and you've got your mid somewhere in here, maybe around 1265 or so, and then all the way up to this weekly level here, and then reassessing. So here's the entry, here's a take profit, here's another take profit, but maybe it comes back up if Bitcoin continues to show strength. If Bitcoin's going to go back up to 18K, then I don't see why Ethereum couldn't go higher and fill some of this in here that we haven't yet visited that. So that's my take on Ethereum. A short setups, I mean, if it breaks down from here, I would not be looking to short this. I would just be sort of on the sidelines waiting to see what happens. Maybe it comes back down, all the way back down to 1150-ish. And then if it comes back, show some strength here, then I'd be looking to take a long, but I'm not looking for shorts right now. So does that make sense to you all? Do you have any questions so far? Rest of the week shows the opposite of Monday sometimes. I mean, yeah, I'm feeling some momentum right now with Bitcoin. I can feel it. Like I've been in this trade for like it feels like forever, and it's finally starting to show. It's starting to do what I wanted it to do, and I do feel like it's gaining momentum, but it might hold back until tomorrow. If stocks open green tomorrow, I think Bitcoin's gonna blast off here, and I think it's gonna come back at very minimum. Conservative target would be around 1630-ish for Bitcoin. What do I think would have to happen in order to put us at lower levels than last year in terms of news such as FTX bankruptcy? I don't know. I don't know. I mean, it seems like we got hit with pretty much everything, right? But not quite, because we haven't been hit with regulation. And, even though it seems like it's sort of trivial, it's not. I mean, it's not trivial because of people's reaction to the Fed and because of people's reaction to the SEC. We haven't seen how they're going to try to control that. And I'm thinking that even though I want to believe that we're going to enter into accumulation, and then we're going to break back above that, and it's going to be a nice smooth sailing from there, there's another part of me that's thinking, you know what? Remember this area here. We had gotten out all of this this big long bear market, got out of the bear market, and then looked like it wanted to come back. And the obvious trajectory for Bitcoin at this point would have been something like this, okay? But instead, we came back down, and basically we're range bound here. This was our range, and then we had COVID, and then this. So, it was kind of messy. It wasn't clean. Whereas like this entire bear market structurally was very sound, and then we broke out of accumulation here. So like from a normal, I'm not sure what the word is I'm looking for here, but from a normal perspective, it's like, it should have played out that way, but it didn't. It never really plays out the way we want it to. And so I'm thinking that we could see a sharp move back up. Maybe we head back to 25, 28K, and then maybe they introduce regulations. Maybe there's developments in, on the political front. And, we had so many, it's almost like you get traumatized when there's things like FTX and Luna. And there was just so much that happened last year, and you think it can't get any worse. Well, it can get worse. And it doesn't have to necessarily be news driven in a bear market for there to be another leg down. And we don't have any signs right now. Let me hide these for a minute. I'm going to actually group these together. As I've shown here, this is really helpful for being able to look at a chart, a clean chart, and then bring them back, or maybe set up your trades. But we don't have anything that's showing us. We still have the downward sloping EMAs. We still have the rejection every time it comes near it. This 12 EMA, it needs to start really pushing back, and it needs to get really boring. And that needs to happen first, and then we have the accumulation, and then we have the breakout of the accumulation. But I think it's going to be more of a larger range, and it's going to be a trader's market in 2023 and into 2024. But 2024, of course, we have the halving event, and as I showed with, let's see if I have that here. End of bear is what I'm, okay. So we have a halving event in June of 2024. I mean, at that point, we've seen what happens after halving events. We've seen, I mean, even this was the previous halving event, but we had to wait 3 years. I mean, this was from here to here was 3 years. So, I mean, if it's 3 years until we revisit this level again, I mean, in the meantime, there's going to be a lot of chop like we saw here. And so being able to identify the levels and just have the context, but be prepared for anything. And that's why I'm not rushing into spot here. But I do believe that there could be events or just price manipulation that's going to bring the price down. It is admittedly going to take a lot at this point, considering what we've been through, but I wouldn't rule out that possibility. I wouldn't rule out the possibility that we get a strong rally and then another sharp leg down, because we haven't seen the capitulation yet that we normally see in a bear market. These aren't signs of capitulation. And many were arguing that this was the capitulation here, but then we had this. So we haven't seen that. So that's why I would just be wary and not be rushing in. Personally, I'm not rushing in. This is not financial advice, but that's my take on it. We don't know. That's right. I mean, we don't know how FTX is going to influence the rest of the space and what other companies are going to go under. We just don't know. I mean, there was so much greed in the last bull market. I mean, there's always greed in bull markets, but there was just so much greed and so many people were over leveraged. And we're seeing now just all the institutions, they were playing the same game. And, you know, who got hurt the most in the end is your average retailer. And they're the ones that are going to be responsible for bringing in the next bull market. They're going to herald in the shift. And so, but their confidence needs to be restored. And so it's going to take a lot, but of course they know how to manipulate, you know, it's a psyops. It's like they know how to manipulate psychology in the media, and people have short-term memories and they're not really paying attention. They're mostly distracted. So, I mean, they could do it at any time, but I think obviously, I mean, how much more can the Fed hike the rates? I think that's coming to an end soon. And so we're going to start seeing more easing, and we're going to start seeing a more, you know, more people that have been sidelined for this past year are going to start coming back in, start re-entering the market. So I'm hopeful overall. But the reason that I'm mostly hopeful is not because I think that it's just going to be a straight shot back up again. It's because I think that at very minimum, we're going to start seeing, I'm going to actually be able to long again, instead of just short the market down. I think we'll have some opportunities to long. And this is one in particular that I think it could be a really good opportunity. Of course, I can always be wrong about this, but right now I'm just looking, if we just zoom in to Bitcoin, and notice here, I feel a little bit lost after I've just put up all these levels, and then I've removed them, and I feel lost now not having them, because it gives me guidelines. It gives me sort of a reference. It's like trying to play soccer or football without having the lines in the field. Like, you're kind of lost. You don't really know where you are. So we've done that here, and it could have went either way. At this point, I stayed in this trade probably, I just had conviction in it, and sometimes it's really test your conviction. But you could have said at this point, people were saying, well, maybe this is a triple top, but this was what was really standing out to me, and where it was in relation to all of it. This is also, you could say, a demand zone, and the demand zones will stack on top of one another. So we have this here, and then we have this bigger one here. And so it's obeying that right now. And it is holding here so far. If it does come back down and it starts to struggle, if it does come back down to here, this is what, 16,620. If it comes back down to here, this is close to my entry here, and it starts to struggle and it starts to show signs of breaking down, then I'd probably scale out, because this is not structurally, this is what we want. We want to see this. We want to see this. This is what you want to see in a bottoming formation. Just like with a topping formation, when we flip this chart, this looks like a distribution, doesn't it? You notice the price is fractal. So this actually looks almost like the previous bull market, where we had those multiple tops. Of course, it's not exactly the same, but you can see that it is losing momentum here. So the flip side of that, it's starting to gain momentum. So this would be a reaccumulation instead of a redistribution. So that's why understanding the Wyckoff method is really helpful. And you start, the more you see these patterns, the easier it is to recognize them. So that's what I'm seeing right now. But if it changes, then we could be range bound for a while longer, and you could consider this potentially a range here. Maybe it is, maybe it isn't. But I'm just, you use the best, look at the best probable outcome here. And so that's where I'm at with it. I don't really want to cover any of the alts unless you guys have some that, sushi was one that I was looking at, that I actually do have a position in this. And this one, I'm back to break even. So, it wasn't a huge position, but the reason that I entered this sushi, and this was my entry here, and this was my stop. So I didn't get stopped out, and I sat through this for like the last 5 days. These are not ideal. This is not an ideal trade. I'm going to highlight it for one reason in particular, because this range here, this is a very big range. Okay. It goes back even further here. And this, I really like as a trader. For me, one of my biggest strategies is using deviations and ranges, because this is where a lot of traders start to go short. They get faked out. It does eventually come back inside, usually, especially when the macro context is more bullish, short term at least. And then it comes back up. Once it gets inside this range, this would be a conservative entry here. Okay, and that's a sloppy one at that. But it comes back inside and pushes back up higher. Then we're looking at targeting much higher in this sushi, on this sushi chart. And so I like this setup. And if I see this on charts, I'm going to be more likely to trade it, even in illiquid markets, such as this one. So I do believe that sushi could move strong and fast to the upside here. But I haven't really been paying attention to a lot of these. Matic actually that's interesting. So Matic came down to the bottom. I'm going to have to redraw this range too, but I'll do this later on. Notice these levels. This was a previous monthly level that I had identified, and notice what happened. Okay, so it held as support. That is of significance, right? And that gives me more confidence when it comes to taking a long position. You could have waited for it to clear this level, which it just did. Now it's hovering over here. I'm not going to personally take a long on Matic, because I'm concentrated mostly on Bitcoin and Ethereum. And I think that if Ethereum, Matic's doing very well today. Matic could push up a lot higher. especially if Ethereum holds here. I'd be targeting, if I were taking a long here, I would probably be targeting, this would be my first target here, and then I'd be looking, probably identify the middle of this range here. Let's just see, let's just take a look at this here. Yeah, I mean, it's close to this level here. It's a little conservative for take profit, but that would be my first take profit. And then I'd probably just ride it out and see if it can break above here. Then I'd probably just be holding on to that trade for some time, because this does look very similar to Bitcoin. It looks similar to Ethereum, and we are at the bottom of this range where they've managed to hold the price for quite some time now in this bear market. It's pretty impressive, actually. I could definitely clean this up. I don't need to have all of these levels here. Yeah, it's been in this range for, how long have we been range bound with Matic? This is why I like this chart. 168 days in this range. This was tricky to trade, admittedly, but for the most part, it's been relatively consistent. Matic is one that it's not on my small caps list, but I think that it's going to do really well in the next bull run. And I think it's going to do better than Ethereum and a lot of the other larger caps. Definitely gonna hold its own. Yeah, they're going to lower the rates. It's going to have an impact on Bitcoin. It's definitely going to have a strong impact on Bitcoin. Yeah, we didn't have a blow off the top in the last bull run. I mean, we kind of had two, right? It was that's the thing. The more people discover these patterns, the more sophisticated smart money has to become. And so, but given that, given the strategies that I share in my courses and what I'm sharing here with you all, it doesn't really matter if this happens again, right? It doesn't really matter if we see these aberrations and it's not just one solid clean move up and then the blow off the top like we saw in 2018. It doesn't matter if you know how to identify your levels, if you understand where support and resistance is going to be. Okay, so I mean, it found support here, and this would make sense. This level would be an obvious level of support, and then we're clear. We were range bound for, geez, it seems like so long ago now, but it felt like such a long time, but it really wasn't that long. It was only 2 months that we were range bound before breaking back above again. But you see that basic price action, we broke above, retested, came up again. This was a long trigger, okay? And then this was actually a pretty decent move here from here to here. Even if you caught half that, not bad as a trader. And then we see another, again, came back down, consolidated, found support, which makes sense. Previous level of resistance here, the top of this range, found support, several wicks here, and then showed some momentum, showed strength. So for me, this was a long trigger. So if you're, and again, had another strong move up, but then we see the distribution pattern here. And then we see we have a range that we've identified. I'm not going to draw all this out for you guys, but we have the main range here, the breakdown from the range, the retest of the range, the failed retest. It can't push back up again. Okay, these are our short triggers. And ideally, we would have just held this short all the way down, but that's not how trading works. A lot of the times we get in and out of positions, but this is perfectly doable for a trader who understands price action and can follow along. It doesn't really matter whether we have these. We're prepared for any sort of black swan event. We're prepared based on the price action. And so I think that 2023 is going to be a good year for those of us that are prepared and understand that The bull market is not just going to come back again. It's not going to do what it did in 2018. It's not going to do what it did in 2015. We're not ever going to see the same sort of price patterns. We can use history as a reference point, but not as a guide. It's not going to give us the exact movements. Okay, we have to anticipate all the potential outcomes and make an educated guess. And so, to many people, trading is wizardry, which I understand that perspective. But if we do the work, we put in the work, we plan the trades, then it's not. It's actually quite boring, and you're waiting for most of the time for it to play out. And so we've been waiting now for the past week or so. It's been pretty boring, and it doesn't look like a whole lot. But again, even on a daily perspective, this is why it's always helpful to look at various time frames. Like even on a daily perspective, this looks bullish to me. If we take just this block here, okay, this price action, even just, or this range here, because we came back down, retested the mid, hovered, consolidated, and now it looks to be finding support. So I'm looking at, these are minimum targets here. This weekly level, this monthly level, okay? And then, but then I'd be eyeing up here. I would not be surprised to see it push back up to 18, 19, even maybe even 20K. Maybe it comes all the way back up to this quarterly level. Smart money is always thinking about how can we fake out the average trader, the average retailer? How can we fake them out? And so if you want to become like smart money, you've got to think about what are they planning right now? The most obvious move is to drop it down and then crush it down all the way to 12K. That's what everyone wants to happen or thinks is going to happen. And so therefore, it's probably not as likely to happen. It may still happen, but maybe we push up higher first. So that's just my 2 cents. I hope that you found this helpful. Lido, I haven't, I can take a look. I haven't looked at Lido in a long time. And this obviously, I don't think this is all of the price history for Lido, but it looks like it's breaking out of a range here. Yeah. Personally, I don't know. I mean, I don't know if this was news driven. Was there some sort of an announcement on Lido that is causing, I can't even remember the utility of the Lido token. Like, is this what's paid for stakers? I can't remember. I mean, it doesn't really matter from a technical perspective. I probably wouldn't trade this. I definitely would not be entering a long position here. I'd wait to see if it pulls back, and then I'm going to use this as my range. So now it may break above here, but because we've had 2 strong momentum candles moving up, I would want to see some consolidation here. If there's like a quick rejection, then I'd be more eyeing some potential shorts. But again, the context, like I said, if Bitcoin and Ethereum continue to push up, which I think they will, then Lido will likely follow, but because Lido just had, I mean, it's up 15% today. I don't know why, again, but it's up 15%. It's sometimes we have those big moves and then they'll sit still while Bitcoin and Ethereum do their thing. So I wouldn't long this, but just dropping down and looking at like the 4H, if it really starts to break out and then comes back and retests and then comes back up again, we get some consolidation and then a break back above, then I would consider a long. But where it sits right now, it's not giving me a clear sign on it. And I'm always wary to long something that just had a big, strong move. I'm also wary to short it right away until I see signs of weakness. And I think this is where a lot of traders get hung up. and myself included, because we're not as patient as we should be. So just, I'm, not financial advice, but I would be patient on this. I'm not going to take an entry on it, but I will actually I'll keep this on my radar, just because we do want to see tokens like this that have big, strong moves, because this is where the opportunity lies. But sometimes, like for instance, Solana, I didn't talk about Solana today, but Solana, I had a feeling it was going to do this, but it wasn't really worth the risk to me, because they start to defy logic, and the chart, you might as well just throw it out the window. I'm going to have to redraw this after what happened last week. But you can see this doji candle here. I mean, a lot of shorts jumped in here all the way down here and just got completely wiped out on that daily candle. And ever since then, it's been showing signs of recovery. I think that Vitalik actually spawned this with Solana, with his comments on Solana. I think Solana could make like an incredible comeback, but it's too risky for me where it is right now. I don't, and because of the sentiment. But if sentiment shifts, as we know with crypto, sentiment can shift very quickly. If sentiment shifts on Bitcoin, continues to the upside, then Solana could really skyrocket. I mean, it's up almost 13.5% today. I wouldn't bet against Solana here. I definitely would not be shorting this, I'll tell you that. But I wouldn't bet against Solana. I think that, like, if it'd be one thing if it was, there was more news that was bad news, but I think most of this is just sentiment. Most of this is just, oh, well, it's, connected to FTX. So obviously we just need to, it's gonna die. Solana's a dead coin. I wouldn't go that far just based off of that, because Solana is more than FTX. So that's my take on it. I mentioned about accumulating spot. I'm not. I'll be clear when I do. When I do start to accumulate, I'll be clear about it. But I'm not yet. And I'm not really so concerned. Like, I don't mind if I miss some of it. If this does if this is accumulation, then we're still in the early stages of it. We need to see more secondary tests. We need to see more tests down. They've got to test the demand down here. So they haven't done that yet. So at minimum, I'd want to see another test, and I'd want to see some strong rejections and more boring range bound activity. I want to see the EMAs change, but I'm not. I mentioned that I think that the accumulation is going to end around the solstice, and that I would be accumulating probably leading up to that. So it could be in the next 3 to 6 months, or maybe the next 3 to 4 months. We'll see. I'm not eager, and I'm actually a lot of the times do better just as a trader. But it is nice to be able to invest when the bull market comes around, and to hold some of these. And that's why I'm actually putting more of what I have for my capital. I'm allocating more of that just to the small caps that I will just buy and hold and just see what happens. And that will be nice, because I won't have as much that I'm working with as a trader, and I can move that off the exchanges. So I hope that this was helpful for you all. I'm starting to get my voice back, and I'm doing my best here. And if you liked it, if you got some value from it, then give me a thumbs up. And if you want to see more of this content, give me some feedback. I'm dedicated. I'm committed to still doing these lives 3 times a week. I'm going to be offering other material on this channel, like it or not, just because it keeps my mind fresh. It keeps me engaged with all of this. And I do believe that cryptocurrency and wealth in general is about more than just one aspect of, learning how to trade, for instance, because you can make a ton of money, but if you don't know how to hold on to it, or you don't have the mental framework to be able to use it properly, then it's not going to matter. And so we've got to be mentally strong. We've got to be emotionally strong. We've got to be spiritually strong. We've got to be connected in every possible way as men, because I know most of you watching this are men, and many of us have, there's various forces seeking to disempower us. And so this content is really about more than just cryptocurrency. And some of you will get it. Some of you will understand that. Some of you just won't. And that's fine with me. Like, I've come to terms with that. And that's why I rebranded my channel, because I don't want to be pigeonholed into the DeFi magic, into just, okay, crypto's booming, now let's watch DeFi. Crypto's not booming, like, it doesn't matter, right? Because life is about more than the market cycles. It's about more than that. So even when the market's down, I'm still going to be creating content. It's just in the future bear markets, I definitely won't be making as much crypto content, but I am still committed. Hopefully, God willing, I'll still be creating this content in the next bear market. So thank you all for showing up and doing the work. And I hope that this gives some clarity, some insight, and that you find some success and some prosperity as an investor. Have a beautiful rest of your day.